Turning to the economy, new evidence that prices you pay for most everyday items are still rising at red-hot pace. The government report out yesterday shows the overall inflation rate was 8.2% over the past year, which is more than economists expected. We are joined now by CBS News business analyst Jill Schlesinger. How are you doing?
Very well, thanks.
All right, so what's going on with these stubbornly high prices?
Well, you know, it wasn't just the headline at 8.2. It's the core rate also, because that pulls out food and energy. Food was up a lot last month, and that has to do with a lot of supply chain issues, drought, and some avian flu issues around eggs. Pulling that out, 6.6% without food and energy. That's the price increase from a year ago, hottest pace in 40 years. And this is incredibly important because that really means that even if supply chain issues start to ease up for goods, services are accelerating right now, and that's cause for concern.
There's also news about Social Security.
Yeah, the only good news about high inflation is that when we talk about the cost of living adjustment for Social Security recipients, this is 70 million people, they're getting an 8.7% increase in Social Security benefits next year. That means an average monthly increase of an extra $140 for average Social Security beneficiaries. That's going to help them fight inflation for next year.
The stocks jumped a little bit, around 2.5%. Why?
It was a crazy day. This report gets released, and it looked like stocks were going to open down by 2.5%. We end up the day with a 2.5% increase, and I'm going to tell you, nobody understands why. This is a guesstimate about what people think the Federal Reserve is going to do. You know what they're going to do? They're going to raise interest rates again at the next meeting. It's in November. We're going to get another 0.75% increase in short-term interest rates. That means the cost of borrowing will continue to increase for Americans.
That was the largest one-day percentage gain in the stocks in almost 2 years.
Unbelievable.
Thank you for joining us. Appreciate you.